Good afternoon, everyone, and welcome to today's training on what your tax volunteers need to know about rideshare driver taxes. I am Jenny, the Outreach Associate at the Get It Back campaign with the Center on Budget and Policy Priorities. Today, we will be talking about rideshare driver taxes. So rideshare services arrange one-time shared rides, usually through an app. So you're probably familiar with the two more popular apps, Uber and Lyft, which is what we'll be focusing on today. So these drivers are self-employed, which does come with its own trickiness with tax compliance. So we're here to really make sure that your volunteers are prepared because this is a tricky topic. And this training is a part of a project we have launched with Francesca of Cash Campaign of Maryland to provide tax resources for rideshare drivers. And we'll chat about the other components of this project later in the training. So today's training is a part of our virtual training series that features the expertise of campaign partners in the field, including Francesca. And for those who may not know us yet, the Get It Back campaign is a national effort to promote tax credits for workers, like the EITC and CTC. We also promote free tax filing services that help workers keep all of their tax refunds. We provide tools, trainings, and other resources, and you can find all of these on our website. The website is listed on the slide, eitcoutreach.org. So with that, I will turn it over to Francesca Jean-Baptiste, Director of Tax Partnerships at the Cash Campaign of Maryland. So Francesca provides training and support to a network of free tax prep partners across the state of Maryland. And let me tell you, y'all, she is a phenomenal presenter. So I am so excited that she is going to share her vast wisdom with us today. Thank you, Francesca.
Thank you, Jenny. All right, everybody. Once again, thank you so much for joining us this afternoon. I know that it's Wednesday and it's 3 o'clock, so we are definitely going to try and keep the energy flowing for the next hour or so as we talk to you about this pretty important topic. As I know many of you all may have taken an Uber or a Lyft or know somebody that actually drives for Uber or Lyft. You might already know how tricky this topic is for a lot of folks. So we had already been working on some stuff that was really focused on self-employed individuals. And then when the explosion around this rideshare economy came across, we decided that we needed to be talking about this very specifically when it comes to Uber and Lyft and these other ride-sharing platforms. So rideshare taxes, how to help drivers figure out their taxes. That's what we're going to be talking about. So if you guys didn't know that already, or didn't realize that you're in the wrong place, this would be the time to get off, or not. You should stay on even if you sign up for the wrong thing. This is going to be helpful. But why does this matter? Well, the numbers are really hard to come by, but there are close to 2 million Uber and Lyft drivers in the US. So that's a lot of people. And a lot of those folks fall into our tax purview. They're making under $55,000. So they're able to be served by VITA and TCE services. They're already coming through our doors, right, with all of their forms or with none of their forms, actually. So it's really important for us to help to figure out how to serve these folks. Also, many of these drivers don't realize that they're self-employed and that there are other tax implications that come with making this kind of money. Even if they're doing it for a couple of hours a week, on the weekends, before and after their real job, there's a whole separate set of things that are going on when it comes to their taxes. They don't realize that they need to have record keeping, that they need to have really good records because they want to take any deductions. They're going to need to substantiate those records. And they also really don't know about quarterly estimated tax payments. So that's, part of the gist is that there's a lot of information that's kind of missing when it comes to driving a rideshare or driving for a rideshare platform. And so we want to really help folks demystify all of that. So that's why this matters. So here are the super exciting topics that we are going to be covering over the next hour or so. Income, expenses, record keeping, other tax issues, and tools and resources. I did get the pleasure of seeing all the folks that did sign up for this. So I know that a lot of folks that are on here are already some experts in their own right on this subject, but it's my hope that I'll be able to teach you something new and that you will be able to come away from this with some, more resources and tools to help your volunteers and help the folks that you're serving, or if not, that you're just gonna have fun with us for the next hour. Okay, so starting off, income. We saw that a lot of folks were kind of confused about what is this income that rideshare drivers have? Where do we find that? So in general, if we're hopeful, the drivers will have their own records and receipts, but we know a lot of times they don't come with anything. So that's, you know, that's the hope. But really what you're going to be looking for are the Uber or Lyft account summaries, and then the Form 1099 miscellaneous and Form 1099Ks. And so we're just going to break that down. So on the 1099 miscellaneous income, that's a form that we're really familiar with, right? It's been around for several years. If someone is being treated as an independent contractor, then there's going to be a number in that box 7, non-employee compensation. We all know that a miscellaneous form is just that. It's a miscellaneous form, so it reports a bunch of different things, not including fishing and boat proceeds, as well as royalties. So there's a bunch of other things. So you really want to make sure that if you're seeing these forms, that the number is in box 7, which is for non-employee compensation. And the thing that can be really tricky about this form is that the Uber and Lyft kind of report them in different ways. The good thing is that they have decided that they will all report the same thing, which is that they will only issue a 1099 miscellaneous for payments that are made directly from Uber and Lyft. So this means this is not from individual ride fares. This is going to be incentive payments, any driver referral payments, or join and support payments, or any bonuses or things like that. So this is going to be monies that are paid directly from Uber or Lyft. And then the way that they'll be handed out is that there has to be at least $600 received in these actual payments. So the thing that's tricky is that if you don't have that $600, you're not going to get this form. And we know that because these are very specific things, so they don't come around very often. Uber and Lyft do have these kinds of specials that go on, but they're not always happening at the same time. So it could be possible that someone would get, $50 in a referral or an incentive payment. And so what does that mean? That means no 1099 miscellaneous from either Uber or Lyft. So it's a little bit tricky, because if you don't have a form, how are you supposed to report that, right? Are you supposed to report that? The answer is yes. You're supposed to report all of the income, regardless of whether or not you receive a form, which is kind of news to a lot of folks when they come through our VITA sites. They're like, oh, I don't have a form, so clearly I don't have to talk about this on my tax return, which is not true. But again, this is how things are a little tricky for folks, because then they may not remember. They're like, oh, I don't know, when did I have a join and support payment, or when did I have a referral incentive? And that's when the summaries are going to be really important. And we're going to talk about that in a little bit later. All right. And now here is what I like to call the crux of the problem, the 1099K. I also thought it was really funny. Somebody mentioned in the comments, is the 1099K like a real form, or is it like the 1098T that we know is can be incorrect and very misleading? And the answer is yes. You definitely need it, because it is a form that is, given to the taxpayer, and therefore the IRS does have a copy, but it can be a little tricky. And so we definitely want to break that down for you. What is on the 1099K and what you should report? So here is, again, where Uber and Lyft kind of diverge. So the 1099K is used to report all payment, card, and third-party network transactions. But Uber will only give a driver this form if, and only if, the driver has had over $20,000 in third-party network payments and 200 ride transactions. And so I know what you're thinking, right? Or maybe you're not thinking this, but you should be, is that Uber is basically never giving anybody any form ever. Because, you kind of have to, it's a pretty high threshold when you think about it. Especially for someone who's only driving on the side, a couple of hours a week, it's really likely that you'll never get one of these forms from Uber, just because the threshold is so high for them. On the other hand, Lyft will issue a 1099K so long as the driver has over $600 in passenger third-party payments. So it's more likely that you'll see someone who has a 1099K from Lyft than you will from someone from Uber. And so here's just a close-up of what that form looks like. And so this is where it gets a little misleading, because if you look, 1A has an amount in the amount of $10,108.95. But if you're looking down at the payments that are paid out by month, it's definitely off by a couple $1,000s. So where do you get that number? How do you arrive at that number? Well, in box 1 for Lyft, it's going to include all the Lyft commission, fees, and tolls. And for Uber, it'll include any expenses that Uber has paid on the driver's behalf. So that number is going to be not just what the taxpayer has received in actual payments. It's also going to include any fees. So this can be a little troublesome when you're thinking about reporting income, because I think it's a good rule of thumb to report the number that's in 1A, but you also then have to make sure that you're deducting fees. And so we'll talk about that a little bit later in the expenses portion of this webinar. But this form looks kind of crazy, right? None of the numbers add up, and it can be a little confusing, but don't worry, we will help you sort all of that out. So basically, if you've been paying attention, you should have arrived at the conclusion that these forms do not tell the whole story. It is pretty impossible for you to do someone's taxes with just those forms who drives for Uber or Lyft. You're definitely going to need the Uber tax summary, and that's going to include the breakdown of annual earnings and any business expenses, and the Lyft driving summary. There really is just no way to do someone's taxes with the forms. You're going to need to get the summaries because the forms just don't tell you enough. And that's if you even get forms, right? So as I said, with Uber, the likelihood that you will get a form is really, really low, just because of the threshold that they have set for themselves around issuing these forms. Okay, so let's look at where we can find some income on the Uber and on the Uber summary. So this is a tax summary from last year, 2017. 2018 has not been issued yet, obviously, because it's not the end of tax, it's not the start of tax season, but we are pretty sure that they are going to keep this, that they're going to keep it looking, very similar to this. Again, the goal for Uber has been to not issue any forms. So they've really tried to make this tax summary and breakdown as comprehensive as possible without giving too much tax advice or being seen as giving too much tax advice. So this is what it looks like last year. And so if you look, you've got all of your driving totals, so the completed trips and the number of online miles. That's going to be important later when we talk about expenses. But we're really focusing on your gross earnings. So you want to look at the bottom on the left-hand corner where I've highlighted the gross income. So just if you're looking at this number, it's actually a combined number. So it's your gross trip earnings and then total additional earnings. So technically, if Uber was to issue actual tax forms, your 1099K would be those gross trip earnings. And then your 1099 miscellaneous would be those total additional earnings. But because those numbers are way below the thresholds, obviously they would not issue any of these forms. And you'd just be kind of working from the gross income. And then this next piece is the expenses, fees, and taxes. This is the breakdown of all of the different fees that Uber has charged that technically would have been listed as part of the 1099K if they issued one. But this is where you're going to be able to see all of the fees that can later be used as business deductions. Okay, and so on to Lyft. So this is the Lyft driving summary. And this also, again, has the breakdown of the total ride payments and then your gross ride payments. And then it has the Lyft commission and the Lyft tolls. And then you've got your total non-ride payments. So these two numbers that I've highlighted, your gross payments and your total non-ride payments, again, those numbers would be your 1099K and 1099 miscellaneous numbers respectively. And in this situation, Lyft would issue a 1099K and a 1099 miscellaneous to this person because, again, their threshold is $600 and that's for either form. But the thing that you really have to impart to clients is that you may not get any forms. And the same thing for your volunteers, right, is that they may not get any forms because if they don't meet the thresholds, no forms are going to be made available to them. And that does not mean that that's not taxable income, because we all know that it is. You're just going to have to do a little bit more detective work to figure that out. And this is kind of where the intake and interview comes in as a very important piece, right? You know, not just do you have any forms, or did you, you know, do any other supplemental, do you have any other supplemental incomes? You have to talk to folks to figure out, hey, I did, you know, Lyft or Uber for like 2 months, because people will do it for just a very short period of time and then forget about it, you know? And then how would you know? Well, the IRS will send them a letter and say, hey, you're missing some income on your tax return. And nobody likes to have a letter from the IRS, right? So that's where the intake and interview becomes really, really important. You got to talk to clients about this stuff, because as I said, we all know that clients will tend to forget. It's always that thing, right? Where they're like, oh, at the end, you know, they're almost at the end of their tax return appointment, and they say, oh, what about this form, random 1099G? I kind of forgot that. That doesn't seem like income, right? And you're like, wait, it's like $10,000 of unemployment income. It's absolutely income. So, you know, this also adds another layer of intake and interview that you need your volunteers to do. Okay. So where do I find that form or that thing? Because it might be that you're not going to find a form. You're going to need to find the summary. And this looks different for each of the different apps, or the writing platforms rather. So for Uber, we have not been able to discover the ability to find it in the app. So you actually have to go to the website, which is partners.uber.com. Go to the tax information tab or page, and then download the following. Really, again, with Uber, what you're going to be looking at is the 2018 tax summary. It's going to be very rare that you'll have someone that actually has any of these 1099K or 1099 miscellaneous forms. Again, and that's just because of the way that Uber has decided that they will distribute these forms to their drivers. Okay, so for Lyft does allow the option to find tax information in the app, as well as the online dashboard. So in the app, you're basically, this gives you the step-by-step, and this is important for you to have for your volunteers, because it's frustrating for folks not to have the documents with them, but it's also helpful if you can help them find it, because a lot of times they don't know that they needed to bring that stuff, and they don't know where to find it. So this can be helpful. So you open in the app, going to the dashboard, tap the menu icon, and then voila, tax information tab. And then all available 1099s will appear under the tax documents and can be downloaded from there. But don't forget, you're going to need to have the Lyft driver summary too. You can't really do much with just the forms. You need to have the summary as well. And then again, you can access these forms through their website, the online dashboard. And that actually might be easier if you're at the tax site, because then you can just print stuff directly. You know, if you're at a site that keeps client documents, it'll be easier for you. That'll be easier for you to get access to the documents. And we have a question here that I am happy to answer because it does relate to what I just said. So for Uber, even if you had a 1099 miscellaneous and or a 1099K, and the thing is with Uber, you probably won't. So the tax summary is really all you need. But it's always good if someone has tax forms that they understand that they might get them and that they should be looking for them and where they can find them. But yeah, the tax summary is pretty much all you're gonna get for Uber. Okay. So on to expenses. I know that this is a really big topic. What can Uber and Lyft and other rideshare drivers deduct for their expenses? And this is really, really important because there is a lot of bad information out there. You know, when we first started thinking about, you know, doing this training, like I said, this is part of a larger training that we do for other self-employed and Schedule C folks. It's a lot of stuff that people think that they are able to deduct that is really, really not true. And so I think as, you know, free tax preparation programs, it's definitely our job to stop that misinformation. We should be giving folks, you know, helping them understand that, you know, basically not every time you get in your car is that going to be a tax deduction. It can be a little tricky, but, you know, we just want to make sure that folks are erring on the side of caution. You know, tax returns that have Schedule C's included tend to get, you know, that extra second or third look from the IRS because, because of the tax gap, right? So we all know that the tax gap is the difference between what the IRS thinks that they should collect and what they actually have collected. And for the longest time, they've had their eye on these small businesses and these business deductions as being a larger problem, and a continuing contributing problem for the tax gap. So, you want to keep away from that terrible 5-letter word that is called audit. And one of the ways that you do that is by making sure that you only take the expense and business deductions that you're supposed to. So come along with me and let's talk about it. So business deductions in general have to be ordinary and necessary, right? So that's really the yardstick. That's the rule of thumb. Ordinary are expenses that are common and acceptable in the taxpayer's line of work. And necessary are expenses that are helpful and appropriate to your particular trade or business. So as I said, we did a lot of research when we were trying to put this stuff together, and just looking at a lot of the information that was available, people were coming out with lots of different deductions that I just, were really crazy. You're a driver, you're driving. So really the major expenses that you're gonna have really kind of have to do with your car. But there were certain websites and certain people that were expounding that, oh, you could get a home office deduction and all of these things. And I'm just like, no, there's no way you're getting a home office deduction as an Uber or Lyft driver. Stop telling people that, that's wrong. So, ordinary and necessary is really kind of your yardstick. We also have to remember that for VITA programs, we are limited at $25,000 in expenses. It's really not going to be very common that you'll see somebody that has such a large number of expenses, but just remember that we are limited to $25,000. I know that there are some AARP folks that might have joined us, and you guys definitely have a different set of scope limitations than we do, but for VITA programs, it's at $25,000. So again, the biggest expense that folks will have access to as an Uber or Lyft driver is going to have to do with their vehicle. And the one that is going to be the most helpful for them is around the standard mileage deduction. So for 2018, that was 0.545 cents. And basically that had to do with differentiating between what are business, commuting, and other miles, right? So the rule is that only business miles are the thing that can be deductible. Anything that's commuting, anything that's other miles are not deductible. And so we have to be educating these folks about what are business miles, what are the things that they, can actually count, right? And so for a good rule of thumb, kind of if the home is the beginning or end of a trip, technically that's not considered a business mile. Usually those are commuting miles. That rule of thumb has gotten a little bent and a little tricky, only because when folks a lot of times get out of their house and into their car, they'll turn on their Uber or Lyft app, right? And so they're in driving mode, which we're going to talk about a little bit later. And so that's automatically being tracked. I'm a little iffy about some of that. We'll talk about that again in a little later on another slide. But I think a good rule of thumb for commuting is that if the home is the beginning or the end, then that is not a trip that should be a business miles. Those are commuting miles. For the standard mileage deduction, you're only going to be able to do tolls and parking and any business percentage of an auto loan and personal property taxes if you're living in a state that actually does make someone pay taxes on their vehicle as part of personal property. So the standard mileage deduction is huge and attractive because it's easy, right? All you have to do is multiply your business miles by that number that's set by the IRS every year. And we also want to tell folks that they should pay attention to that because the IRS does set it every year. And it does tend to change, not too much, but it does change. It was up to like 56 cents for a while, and then they scaled all the way back to 53, and then it came up this year to 54. So just, pay attention to what the standard mileage rate actually is. But for the most part, this is going to be the easiest, but also largest deduction for folks to take as an Uber or Lyft driver. So other deductible miles. So miles driven to pick up passengers, those are definitely going to be business miles. Miles returning to or from drop-off points to a place to wait for another ride request. So like I know that, so we're in the Baltimore area, and a really big hub for the Lyft and Uber drivers is at the airport. So there's like the cellular lot where they'll just kind of hang out to, get a fare from the airport. So driving there depends, if you're driving there from your house, one could argue that those are commuting miles. But you could argue that those are business miles. So it's a little tricky. I think if it's a longer ways, then obviously there's the more of the likelihood that you could pick up a ride on the way there. So that might be easier, but you just got to really make sure that folks understand that not every time someone gets in their vehicle, it's a business mile. Like there has to be a business purpose. And again, a good rule of thumb is if it's home, beginning or end, then those are kind of commuting miles. And then any other mileage that's related to the business. So this used to be a little bit trickier when Lyft and Uber used to track miles in a different way. So it used to be that Uber would track the mileage only if you had a passenger in the car. Just this year, they've decided that they're going to track miles just, while the app is on. And the same thing with Lyft. They track basically when you're in the app, it tracks your miles. So there is an argument that could be made that the mileage report that a driver gets at the end of the year might actually be overstating some miles. But this is where where record keeping, as we're gonna talk about, will play a really big part, because you really need to be able to show a mileage log. You need to be able to show what your business miles are. So it's really, really important that folks are doing that. I know that it's a tedious job, but this is part of the work, right? You're in the business of driving. And so, the business expense deduction for vehicles is going to be one of the largest ones that you have. And so it's really important that folks are tracking this mileage and have a mileage log, and not just depending on what the mileage is provided in those Uber and Lyft statements. But when you think about what other mileage could be deductible, let's say somebody went to get, had just dropped somebody off at, the airport, and then they drove to get gas for their car because, they were going to drive for the rest of the day. You could say that those are business miles too. Or if someone, just came from waiting at the cellular lot, didn't get anybody, but went and drove to Costco to purchase waters or candy or food for their passengers, one could argue that those are also business miles. But you got to keep track of all of that stuff. So that's really the takeaway from this, is that mileage is definitely important. And because it's so important, you want to have those records to show that these miles are deductible. Okay, so the other option is actual car expenses. So when somebody comes into your office and has every single gas receipt that they've ever had, that they've ever spent, they've got the receipts from any repairs, they have all of their lease payments, all of that stuff, those are actual car expenses. And that is something that might be helpful for some folks. But there's a whole separate set of requirements for that, right? You have to keep track of all of the expenses. So every receipt you will need for every car wash, the garage rent, gas and oil, your license, your parking fees, registration fees. You have to have all of the receipts for that. And not to mention, is it tedious, right? Because you have to track down every single receipt. But also that takes them out of the scope for VITA, right? We cannot do any returns that have actual car expenses, which is pretty understandable because, car depreciation, actually depreciation in general, might be one of the toughest tax concepts, to really figure out for some folks. And it just makes, it would be a lot to ask a volunteer to try and figure out someone's, the depreciation on someone's assets. So it makes sense that that would be out of scope for us, but it can be helpful, for folks to do that. The name of the game is you want to pay as little taxes as possible, so long as you have accurate records and supporting documents. And so for some people, it's worth the expense of paying someone to actually do their taxes, so that they can get this actual car expenses. So for example, if someone is paying, if someone has a very expensive luxury vehicle, so depreciation on that would be higher. Also, if someone is paying lease payments, leasing vehicles through Uber and Lyft has actually become a pretty big enterprise. And so the only way to get those, to recoup some of those lease payments as a deduction is to do the actual car expenses method. But, for a lot of the folks that come through our doors, they just want their tax return done. And so we just have to explain to them that I really appreciate you bringing all of these receipts, but none of that matters because we're going to need to take the standard mileage deduction. But like I said, it's important to give people that option and let them know that there is a possibility to do that. And so, you know, it's up to them. They have autonomy over whether or not they're, you know, they can afford to pay for someone to get their taxes done. You know, some folks, it will be worth it to them. So we should definitely be talking to them about, you know, that option. And as I said, leasing vehicles from Uber and Lyft has become a really big thing. At least as I've noticed, as I've been doing some of my field work, researching, talking to all the Uber driver and Lyft drivers, mostly Lyft drivers, about, you know, what the status is around their vehicles. So again, you just want to give folks that option. The other issue around actual expenses is that you have to allocate stuff. If someone is driving their own vehicle for business and for personal use, then they're not able to deduct every single thing, right? They have to first figure out what is the portion that they're using their vehicle for business, and then arrive at a percentage, and then use that percentage to deduct those expenses. So first they'll have to figure out what's their total mileage for the year. Then they'll have to figure out, well, how many miles did I drive for business use? And then that's how they'll arrive at the percentage, and that's how they'll be able to deduct those expenses. So those are allowable expenses. But again, that only kind of matters when you're talking about taking actual car expenses. If you're using the standard deduction, the standard mileage rate, all you're gonna need is to know what your business miles are and then just multiply that by the rate. But there are other fully deductible expenses. So the Uber fee, Uber provided device subscriptions, tolls that are incurred during the drive, black car fund fees, city fees, airport fees, basically all the fees that Uber or Lyft charges you, basically, those are gonna be fully deductible on the Schedule C tax return. It's only when you're thinking about fees that have to do actually with the vehicle that you have to kind of, you know, do the prorate and the allocation of how much you're actually going to deduct on your tax return. The same thing for Lyft, right? Lyft commission fees, any express pay fees, the rental fees, all of those things are going to be fully deductible. But if you have any of these other fees that are going to be, you know, part of the actual car expenses, that is going to have to be allowable, especially, you know, if you use the same vehicle for your business and personal and personal uses. And again, the way that you would figure that out is figuring out what your total miles are for the year, and then figuring out what portion of those miles are going to be business miles, and that will help you arrive at a percentage. Okay, so you already see how actual car expenses are way more complicated than the standard mileage rate, which is why that's out of scope. But again, you definitely want to be presenting that. You want to be presenting these choices to folks because we are there to educate them. We want them to have all of the necessary information so that they can make good choices. Okay, so what miles are deductible? So again, this is again less of a problem now that both Uber and Lyft are tracking miles basically once you turn the app on. But again, I just want to say, you know, driving to a busy area from home. So if home is the end or beginning of the trip, I would view that as commuting. But again, if you are leaving the house and then you're driving and then you went and picked up somebody down the block right there, then those miles are probably going to be, you know, it's easy for you to say that those are business miles because you're going to get a ride. I just think that we have to really preach, being conservative around that. You know, you can't just deduct every single mile every time you get in your vehicle. So I would definitely argue to be a little careful about, you know, making sure that you explain what commuting miles are versus what business miles are. So you definitely know if you're waiting for a request, you get to a busy area and log into the app. So again, folks drive to the airport and, you know, circle around a little bit. All of those are miles that they're waiting to pick up a passenger. Also, if you're driving a paying fare, right, getting someone to their desired location, that's also going to be business miles. But what if you drive to go get a sandwich? What if it's time for a snack break? Well, technically, if you're doing anything for personal reasons, those are not business miles, right? If you're going to get a sandwich, it's probably not going to fly as a business mile. But what if you leave that place and go and position for another, at another location for another ride? Those are also going to be places, that's also going to be considered business miles. And then again, if you drive home at the end of the day, you don't pick up any rides, you're going home. So those are definitely not going to be business miles. Those are going to be commuting miles. Again, I want to say it is a little tricky because of how, people are recording the miles in the app, basically anytime you're in driver mode. It's definitely, you want to err on the side of being conservative. Make sure that you understand that you're explaining the difference between commuting and business miles, because people tend to not understand that commuting miles are not deductible. Okay. What are some of the other deductions that folks can use? So yes, here is a non-exhaustive happy list of all the things that people can deduct as an Uber or Lyft driver. So the cost of the phone, if it's a phone that's just for business, then that is something that could be fully deductible. However, if it is, again, being used for personal use as well, then you have to allocate that business percentage. You're not going to be able to deduct the entire cost. The same thing with the phone service plan. And then, repairs, any accessories. So if a driver provides, fancy cables, like I was in a car the other day and this person had this, this like magical ball that had all of these different chargers for basically any kind of phone that you could ever have in your life, including a flip phone. He had all of the chargers in there. So that's stuff that's, definitely deductible. Any snacks or refreshments. I was in a party lift once and there were lots of different, there were chips, there was gum, candy, all of that good stuff. So all of those things are going to be deductible as well. An electronic toll transponder, floor mats. If there's some office supplies that folks will use, basically you need to buy pens for your mileage log, all of that good stuff. Dash cams. So this is something that a lot has recently become a thing for folks. They want to have a dash cam for the safety of their passengers, for their own safety. Those are also things that are deductible expenses. Car tool kits, first aid kits, tire inflators, portable battery, flashlights. Music apps, there's always Connect Your Music, Spotify, Pandora, all of that good stuff. If someone has a music app subscription or any other kind of entertainment subscription that they're providing fully for the riders, those are all things that can be deductible, as well as fees for background checks. So I think last year Uber really did an overhaul around doing background checks for all the folks that were going to drive for them. So those are also things that will be deductible expenses. So this is not a non-exhaustive list, but it's pretty comprehensive, I think. And we did do a lot of research around what were common or not so common, but useful things that could be deductible. But again, the rule of thumb is going to be necessary, right? Or is going to be necessary and helpful. Like you really need to make sure that that's kind of like your yardstick when it comes to deductions. So ordinary and necessary. Okay. So let's go back to where we will find fully deductible fees on the form. And I know that a lot of you folks are chatting in questions, which is exciting because that means you're paying attention to what I'm saying. And I love it when people are involved. So I'm not ignoring them. We're definitely not ignoring them. We're just trying to, get through all of this stuff because I can definitely wax poetic about all of this for a really long time. So I just want to make sure that you guys get through all of our slide presentation, and then we will get at your questions as soon as we can. Okay, so it's not that we're ignoring you. We're answering. I know that Jenny is answering the easy ones as they're coming through, but we will get back to you. So keep on chatting your questions and we will answer them as best we can. But just trying to get us through this, the next couple of slides. So for the Lyft driving summary, you're going to find the deductible fees here where it says the Lyft commission and the tolls. So those are going to be the fees that will be deducted as expenses. And then you'll see at the bottom where it says total stats. So that's the rides in ride and out of ride miles. And so Lyft defines their out of ride miles as miles that are driven from accepting a ride to picking up the passenger. So again, it is kind of possible to overstate some of these miles just depending on how people, where people are coming from and how they're doing it. But, this is a pretty good number if someone doesn't have their mileage logs, which we will talk about in a minute. But you want to add all of the mileage and then multiply that by 0.545 for your total mileage deduction. And that is what you'll put on the Schedule C. But also don't forget to include any of the Lyft commission fees and any of the tolls. That's going to be necessary. And so I know that like I said, the 1099K box 1A already includes what is paid to the driver, but also includes the fees. So you want to make sure if you're going to use that number on the 1099K that you make sure that you separate out those fully deductible fees. You can also, it's really up to the site manager and how they want to complete these. But you can just put in the total amount that was paid to the driver. So total ride payments. But then you have to make sure that you don't deduct any fees, right? Because then that would be giving them an extra benefit. So I always think a good rule of thumb is to be using the complete numbers with the 1099K and going through and making sure that we're getting all of the deductible fees claimed and figured out on the Schedule C. Okay, and then for Lyft, the driving totals are going to be at the top. So you would add any additional miles, and then you would again multiply that by the 0.545 cents. And then on the next page, which is going to be that table 1, that expenses, fees, and tax, you want to make sure and go through that you have that you've taken out all of these Uber fees. So, the booking fees, split fare fees, basically all the fees, you want to make sure that you're getting all of that stuff recorded on the Schedule C. A big problem with the 1099K was that people were just reporting the 1099K box 1A and not subtracting out any of the fees. So don't do that. If you learn anything from me today, it's don't just use the 1A because that includes all the fees. So you're overstating someone's income. So definitely don't do that. Make sure that you're going through the tax summary and making sure that you have see all the expenses and get those deducted on the Schedule C. Your clients will thank you because they'll have to pay less. Okay, so record keeping. Record keeping is really important and we cannot stress that enough. Folks really need to be keeping track of their records on their own. These tax summaries are really great. But they're just that, they're summaries. And so there could be other, fees, other deductions that they're not taking advantage of that Uber and Lyft don't know to report. And so that's why it's so important that we have to stress to these folks that you are a small business. And because you're a small business, you have to keep track of your deductions. And the way you do that is through record keeping. And of course, we know that the IRS doesn't exactly state per se what type of record keeping system someone should have. They do say what kinds of records are required for certain kinds of deductions, but basically you have to have a system in place that is able to very clearly and accurately state income and expenses. So however someone figures out what that system is, that can be, totally fine. It could be, we preferably would not like a large plastic bag, but it could be, a large accordion file. It could be an Excel spreadsheet. It could be apps, whatever works for them, but you just want to make sure that you have records. And so what kinds of records? So bills, credit card statements, any other receipts, invoices, mileage logs, canceled image or substitute checks, or any other proof of payment, or account summaries. And I do have to say mileage logs are super, super important for this clientele because again, we know that the biggest deductions that they're gonna have has to do with their vehicle, right? So whether they're gonna take the standard mileage rate or they're gonna do actual expenses, but they have to show something for it. The summaries from Uber and Lyft that show how many miles that someone has driven, that's not enough. I've, like I said, gone through, done a lot of research, read a lot of the blogs, and a lot of folks that might have come audited have tried to present some of these things, and the IRS has come back and said, that's not enough. That's not a mileage log. That's just telling me, how many miles you allegedly drove. So you need to have a mileage log. It should have the date, it should have the destination area, business purpose, the miles for the trip, ideally starting and ending odometer reading, and a description. And I know what you're going to tell me. You're going to say, wait, somebody who does like 50 rides a day is going to be super annoyed about having to do that. And you're right, absolutely. But you know what? They're a business. This is part of being a business. This is part of being a business owner. You want to make sure that you have all of this information. It's necessary. But of course, there's an app for that, right? A lot of these different apps will put all of these different, will track your mileage, and will, create all of these different logs for you, but not all of them do. So you want to make sure that folks understand that those things are available, but they also have to make sure that they are able to create a mileage log out of them. So I know like QuickBooks will definitely have something for you to download, a spreadsheet that shows all of your different miles. I think the same with MileIQ. But again, you have to make sure that they understand that a mileage log needs to be present. You can't just count on the summaries from Uber and Lyft. Okay. All right. So reconstructing records. Well, that is tough. Easier said than done, because, I can barely remember what I did last week, right? So when it comes to April and you're trying to figure out how many miles you drove, I'm sure someone's going to give you a very blank face because it's going to be hard for them to remember what happened January through December when they're sitting in your office in, February or March. So you definitely want to start with Uber and Lyft statements. But again, as I said, that is not enough. And so if you do end up having to reconstruct records, you definitely want to err on the side of caution. It's really hard to figure that out because you really need your odometer, you need your mileage log to track all of this stuff. And so if someone doesn't have any, pretty much all you have is your Uber and Lyft statements. And you can, if someone has done this before, and like last year in their prior year return, and they were better about record keeping the year before, you might be able to use the same information that you put on last year's return if they think that they've done around the same amount of work. But again, reconstructing records is really, really tough thing to do. And so if it does happen that someone comes in and doesn't have any of that information, you got to start with the Uber and Lyft statements because that's something that you have. But I would really err on the side of caution and, probably, just not add any additional miles because you don't have any mileage logs to back any of that stuff up. So you really want to, again, err on the side of caution. Reconstructing records is very, very tough. Okay, so what are some other tax issues? So number one, telling someone that they are a small business, that they are self-employed. For the longest time, it was hard for people to wrap their heads around the fact that once you get this 1099 miscellaneous form, this 1099K form, that means that you are not an employee, that these folks do not consider you their employee. You are basically, as far as the IRS is concerned, you're running a mom and pop shop that drives taxis. You are your own business. And that's something that's really important and that you have to impart to all of your clients. One thing that I found that was really helpful was talking to folks, was doing the comparison with people about independent contractor versus employee. So talking about, how the income is taxed, gross for employees, that's gross wages minus any pre-tax benefits, subject to income, Social Security, and Medicare taxes, but if you're an independent contractor, it's gross receipts minus your allowable business expense, your business deduction. So that's already right there, a huge disparity in how that income is taxed. And then going down to Social Security and Medicare taxes, employees do pay for those taxes, but they're able to share that tax burden with their employer, right? Not so with the independent contractor. With independent contractor, you got to pay all of that stuff on your own. So it's really I found it really helpful to kind of use this comparison as a way to drive it home that you are not an employee. Uber is spending millions of dollars in court to make sure that you understand that you are not considered their employee. And I'm sure Lyft is doing that in a different way, but they are very clear that you are a partner and that you're a self-employed person. So self-employment tax is really kind of the crux of the issue here. Folks don't realize that self-employment tax is an additional tax that folks that work for themselves have to pay to fund their Medicare and their Social Security. It is a huge problem. because it's kind of the slap in the face when folks come into your site and, you know, they have this $10,000 in income, and automatically that means $2,000 or $3,000 in self-employment tax. That's what it means. And it's due when an individual has over $400 in self-employment income. So basically that means, you know, you did a couple of rides, you worked a couple of days, and it's very likely that you will owe self-employment income. And again, because self-employed individuals work for themselves, they have to pay both the company and employee portion of the tax. So this is another really big area as to where folks are not educated about how Uber and Lyft or driving for these rideshare platforms can impact their tax lives. Again, it's calculated according to the net income from the business. So that's going to be income minus expenses. For 2018 and for the past couple of years, actually, self-employment has been 15.3%. And this again includes the employer and employee share of Social Security and Medicare. This tax is figured on the Schedule SE, which is really good. So for all the folks out here that are using software like TaxSlayer or TaxWise, you know, once you start doing that Schedule C, the Schedule SE is automatically done for you. So you just, you know, you don't have to figure that out. And then a good thing to note is that half of the total amount of self-employment tax is taken as an adjustment. Whether or not that's super helpful is debatable, but you know, it's there. It's an attempt to help out. The other really important thing to note is that a lot of people tend to think that if they have a full-time job, that any withholding that they have from that full-time job will cover any self-employment taxes, and that is not always true. So self-employment tax is an additional tax. Like that is the hardest thing I think that a lot of clients have wrapping their mind around. They're like, oh, it's just income taxes, but it's not. It's income taxes plus self-employment tax. Those are two separate things. And the only thing that goes to help to pay down self-employment tax is refundable credits and withholdings. So you can have all the non-refundable credits in the world coming to you, and that would be great. It just wouldn't help you for self-employment tax purposes. And so that's another really important thing for folks to figure out. And I know I'm kind of being a downer at the end. I'm really sorry. But one way to help cushion the blow, if possible, is quarterly estimated tax payments. And this is a way to pay taxes on income that is not subject to withholding. It's usually paid in 4 equal payments throughout the year. And there does come a point where folks are actually required to pay quarterly estimated tax payments. And so depending on how much you earn, you actually might have to pay that. And if you don't, there is a penalty. And we're running out of time because, as I said, I can't wax poetic on this stuff. So I'm just going to breeze through this part. So know that there's a form, it's a 1040S. Payments are due, you know, in quarters, but I always tell my folks, you know, if it makes sense for you to think of this as another bill that you pay on a monthly basis, then do that. You know, because it's really easy for folks to forget about quarterly estimated tax payments, right? It only comes up every 3 months, and then they have these like weird schedules. But you know, if you can set it up to pay it as you would another bill, if that's a way that to help you remember that you need to do it, then do it that way. The IRS is totally happy to take your money whenever you will give it to them. They're okay with it, as long as you have records to show that you made these payments. You know, doing it when you can is fine. But again, this also is can be a difficult conversation because a lot of times folks, you will get that pushback from clients that say, you know, I can't afford to make these payments. And you know, that does happen. So it's not possible for everybody, but for folks that are thinking about this, you know, that are making a significant amount of money using these platforms, quarterly estimated tax payments or estimated tax payments, because you can pay whenever, is really a way to cushion the blow. Okay, so here are the takeaways. So the top things that you need to tell your volunteers to make sure that they're trickling down to their clients, because this is important. You know, VITA and free tax prep, you know, we are all safe spaces. We are the face of, you know, tax prep for a lot of these folks. And hopefully if they're coming to you, that they have faith in your abilities and trust in you, that you, I'm sure, have spent a lot of time building up in the community. So you want to make sure that you're telling them these things. So yes, you are a small business. Number one, yes, you are a small business. Be sure to track all of your expenses, especially mileage. That is going to be the largest deduction that you can take. You will need to pay self-employment taxes. It's more than likely that, you know, some folks will be earning over $400, and that's all it takes for self-employment tax to be triggered. And it's super, super important because, you know, at the end of the day, when folks want to retire and, you know, they want Social Security, they want Medicare, you have to have paid into that. And that's what self-employment tax does when you're working for yourself. And then make estimated tax payments if and when possible. Again, that's not the reality for a lot of folks, right? But if they can, at least just put it on their radar so they know that there's something that they can do. And then again, file your taxes. We held a focus group with some Uber and Lyft drivers, and a lot of folks, the thing that came out of their mouth was, this was too complicated for me, I just didn't file. And we were all just like trying to maintain neutral faces and be supportive and say, okay, guys, we're gonna need for you to fix that for next year. It's better to file and talk to the IRS than ignore them, because then that makes them aggressive when you do ignore them. Okay, so now I'm going to give it back to Jenny so that she can tell you a little bit about all of the amazing tools and resources that we have available, that we have come up with, so that this can be helpful for folks that you see. Jenny?
The first resource that we've created that will be super, super helpful, hopefully, for everyone is the Roadmap to Rideshare Taxes cheat sheet. So this is really, we created this really for rideshare drivers, but basically it summarizes the most important topics that we've talked about today, right? So tracking expenses, paying quarterly estimated payments, and then filing taxes. And then the other side of the cheat sheet goes into expenses more, and it does have a checklist on the back so that your volunteers can go through this the day while they're filing their taxes. We also have created a rideshare tax organizer. This was heavily borrowed from Prepare and Prosper, so thank you. But basically, we have a form online. It goes through all the different elements of the taxes that people need to have on hand. So, right, their income information, whether or not they've paid estimated tax payments, and then it goes through their expenses. So if you can get this form into people's hands before they show up at your tax site and have them fill it out, hopefully the actual tax filing will be a lot easier because they will have everything ready. And then finally, we do have a new website where all these resources will live, ridesharetaxhelp.com. Here I have listed all of the topics that we include, and we are sending out this PowerPoint, and so you'll have links to all of these pages. So basically, I'm going to share my screen with the website right now. So here basically we have the landing page for the website, and so the first item that you're going to see right over here is the 101 guide that we've created. If you scroll down a little more on the right here, you'll see links to all of the informational pages we have as well. And then at the bottom, we have the resources that we just talked about. So the cheat sheet, we have a mileage log and tax deduction tracker, and then we have the rideshare tax organizer right here. So I want to click through to the 101 guide really quick. So if you have any questions about, or if you're just confused about this topic in general, I highly recommend reading through this 101 guide and sharing it with your tax volunteers, because this summarizes all of the topics that we talked about today in our training. So everything you could ever want to know about in this page. I also wanted to quickly show a few of the topics that I think people find a little more confusing. So we talked about income. So where do we find income information? So we do have a page on that. If you scroll down, you'll see some sample forms, the 1099K and then the sample 1099 miscellaneous. If you're confused about which number to take, we have it indicated right here. So that should be helpful. And then we also have instructions for how to find this information from Uber and from Lyft. So all the instructions are here. Expenses was also another topic that folks said they found confusing. So this page does explain how expenses work, what can be deducted, and then we do have this graphic right here that goes through operating expenses versus vehicle expenses. So these are the different operating expenses that you can take, and then different vehicle expenses. And then we have it sorted by standard mileage deduction, standard mileage versus actual car and truck expenses. I did want to quickly mention quarterly estimated payments. So we don't have this tool up yet, but we are working with our tax team to create a calculator that folks can use. I think especially for folks who are just starting to do the rideshare driving, they may not have a good idea of how much taxes they will owe at the end of the year. So if they're looking to make quarterly estimated payments, they will be able to use our calculator tool and from there figure out how much to pay the IRS. So we have many questions to get through. So first, so I have clients that get a 1099K and 1099 miscellaneous from both Uber and Lyft. Do I need to do a Schedule C for each 1099 form so that there's 4 Schedule Cs, or can I combine them?
Oh, that's a great question. And the answer is no. If you have someone who is doing driving for Uber and Lyft, then you just need to have the one Schedule C that is coded to the one 6-digit code, business code that has to do with driving car and taxi. I forget what the numbers are. But as long as it's the same thing, you definitely can add all of that income on one Schedule C. Now, if that person was doing something totally different, so we did once have someone who was an art student and was creating art and driving Uber and then teaching. And so there was, you know, they were all different industries. And so then we had to do multiple Schedule Cs, but for the one, you know, just Uber, Lyft, that's going to fall under the category of driving. So you just need to do the one Schedule C.
Mm-hmm. Cool. I did get a couple questions about the mileage log. So I did want to just point out, technically, drivers don't have to bring their mileage logs to the tax site to get their forms filled, taxes done. But if they are audited by the IRS, they do need to have a mileage log to back up the expenses that they claimed. So it's really for their own sake that they should have a mileage log, less for the VITA preparer.
Right. But it's also helpful for us too, right? Because then that makes us think that, you know, these aren't just round numbers that they've settled on, right? That there has actually been some thought, you know, and process into doing that. And, you know, it's a relief. I know that whenever I see a mileage log, which I got to tell you is very few and far in between, I get very excited because I'm like, yes, you know what you're doing. Or when I've talked to somebody and they come back the next year and they have a mileage log, I'm super happy about that. So definitely do be encouraging folks to keep those mileage logs and bring them back to you because it will make your job easier, right? It makes taxes less painless for everyone.
Mm-hmm. Absolutely. So another question, is $25,000 a limitation on expenses for Uber and Lyft or Schedule C in general?
So that's a limitation on Schedule C in general for sites that are VITA. So as I said, there might be some AARP, TCE folks that have different scope limitations, but that $25,000 is for VITA programs. And that's not just to Uber and Lyft, that's just any Schedule C.
Mm-hmm. Okay. So this is an interesting question that I hadn't thought about. Although car insurance is an allocable expense, some insurance companies offer a specific, it's like a plan for a specific rider.
Yeah.
So
yes.
California, it's the, I don't remember what the number is.
Yeah.
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 So yeah, specific to the use of the vehicle for
their business.
The rideshare. Right. So is that specific portion of the car insurance fully deductible on Schedule C because it's directly related to the purpose of driving?
Yes, and great question. Yes, there are some states that require that the Uber drivers have actually separate insurance because it'll have higher deductible if someone gets hurt or something, you know, in an accident. And that is something that is going to be fully deductible because that has nothing to do with the person's actual personal driving. That has to do completely with the business. So that will be fully deductible. So that's a great question. Thanks for asking that.
Mm-hmm. Someone has commented, oh, AARP has the same $25,000 limit total for all Schedule Cs and cannot be a loss. So
yep. Same for us.
Yeah.
Oh, okay, great. Thanks, Michael, for sharing that. Yeah, and that's another thing that I did want to touch on a little bit. You know, a lot of these folks don't necessarily realize that when they're driving for Uber or Lyft, they might be coming in at a loss. You know, because they're, you know, might need to be doing some income patching, some smoothing, you know, make a couple of dollars to get through the month or whatever, but not really seeing the big picture. That's kind of why it's really important to have these records so that they can see, you know, at the end of the day, am I making money? And I can't tell you how many articles and blog posts that, you know, Jenny and I both read that's like, is this actually profitable? Does this actually help people? And, you know, We don't have the answers to that, but a lot of times it does come out to be a loss. And unfortunately, we cannot help those people when, that's outside of our scope limit. No net operating losses.
Mm-hmm. All right. So are snacks and refreshments considered meals and entertainment or supplies?
Ooh, that's really good. So if they're provided for the passengers, those are going to be supplies that are considered deductions. So not meals and entertainment. And with the new tax law, meals and entertainment wouldn't be helpful to them anyway. But it would be considered because it's for the consumption of the driver. So I haven't read anything yet that says that. So for right now, I think it's safe to treat it as supplies that can be deductible.
Mm-hmm. Awesome. Okay. Aren't repairs part of the mileage allowance? I think only for actual, right?
Sorry, aren't what?
Repairs part of mileage allowance?
So yes, the repairs are going to be part of actual expenses. So you can't, it's rolled up into the standard mileage rates. That's, that number encompasses all of that stuff. So when they settle on that number, it's because that's, what they think is a good estimate of, depreciation costs, oil, gas, repairs, all of that stuff is rolled up into the standard mileage requirement, which is why, a lot, if it's been a year that a client has had to do like major repairs on their vehicle, it might be worth it for them to do the actual car and truck expenses as opposed to the standard mileage rate. But the unfortunate thing is that we can't help them.
So this goes back to your earlier point about commuting miles. So we have drivers living in Fremont. They drive their cars from home to a parking lot in San Francisco International Airport, which is approximately 45 miles away, and in a different metropolitan. Are these miles deductible?
Yeah, that is so tricky. And it's a subject of a lot of debate because, people, it is, they're driving from their home, but it is in pursuit of a ride, right? They're going to this hub where they know it's going to be very busy and is going to generate some income for them. And so I would err on the side of caution and not deducting the total mileage. Just me personally, I would, maybe do half, but I wouldn't, I would definitely err on the side of caution and not deduct the whole mileage. They can always stop at a gas station and then your trip isn't from home, so I just think you have to be really careful with that, driving out, to certain areas and wanting to deduct that completely when you are coming from home. It's been debated quite a bit. Of course, we don't have any guidance from the IRS, which is why I say err on the side of caution.
Absolutely. So this one I hadn't thought about. Since the cents per mile, so the standard rate, includes depreciation and the rent or lease of the equipment of more than 30 days is out of scope, if the Uber or Lyft driver leases a car, isn't that return out of scope because they're leasing it for more than 30 days?
Technically, yes.
Yeah, so a couple people brought that up.
Technically, yes, but, it isn't, so technically yes, but there is, I forget how they do it. Like they do have to, no, actually that's with rental. So yeah, technically if they are leasing a vehicle, it is out of scope for us. And it would make sense that they would want to see, that they would want to get the benefit of those lease payments, as a car and truck expense, that they can deduct. So yeah, send them away.
Yeah. This question, can a person ask their employer to tax them more in order to balance out the taxes that would be owed by self-employment, so adjust their withholdings?
Absolutely. And that is one of the best ways to do it, because then that takes the onus off the person actually having to, stay on top of quarterly estimated tax payments. that's totally within their control. That has to do with their W-4. So they're the ones that fill that out. And, you know, they can always tack on, say, an extra 100 or extra 200 off of their paycheck so that they are paying into that. So that is another option. And that's a great, easy way for folks to be, you know, picking up the slack for self-employment tax.
Absolutely. So this person wanted to make sure we were covering this, but how would the new tax law affect preparing an Uber Lyft return? Would they qualify for the 20% deduction? So they're talking about
I was hoping that we could make it this whole hour without somebody bringing this up, but I forgot. If you're on this webinar, you are a tax nerd. You are part of the tribe. Okay, so here's the thing. I don't think that it's going to make our job any harder than it already is. I hope. So from what I understand about, because what you're talking about is QBI, yes, is the qualified business income deduction, is that all the folks that we serve are going to qualify for it. And hopefully this, the system, the tax software that we are using will do those calculations for us. So I don't necessarily see there being a huge burden on our end, but that is wishful thinking. So that is my hope, that it will not be too much of a problem, because that piece doesn't have to do with the Schedule C. That actually has to do with the 1040. So, well, you know, it has to do with the income, but the calculation isn't done on the Schedule C. So my thought is that it won't be too bad. But again, that's wishful thinking.
All right. Are tax summaries reported to the IRS?
So no, they're not considered tax forms, so they are not reported to the IRS. But we all know that the IRS has ways, right? They do a lot of comparison, like crossover. So that's why like the forms are in triplicate, you know, and all of these things are deductions and expenses on, you know, Uber and Lyft balance sheets. So there's ways for them to like trace all of this information and get access to it. It's how long it will take. But the answer is, right now it's just the tax forms.
Okay. Someone wanted to comment, SE, where did the comment go? Oh, SE tax is slightly less than the sum of both sides of Social Security and Medicare.
Sorry?
Just to clarify, self-employment tax is slightly less than the sum of both sides of Social Security and Medicare.
Sure.
So
thanks.
just a comment for us. Okay, and then, okay. Sorry, I'm trying to understand it. Okay, so this person says for local income taxpayer clinics, the rule for scope is about like 90-10. So 90% of clients should fall within general guidelines, and then 10% can be outside of the guidelines at the discretion of the program coordinator. Is this the same for VITA?
So it isn't written anywhere, I don't think. But I know that a lot of programs do have that approach, but it's really, you know, it's on their level of comfortability, like what they're comfortable with taking, doing, you know, especially as they don't want to make it too much. You definitely don't want to make this a habit of doing tax returns for folks that are out of scope. But it really depends, I think, on the program. There are some folks that, you know, actually incite their own kind of income limits, right? So like we know that the top tier is really around the EITC, but there are some folks that will serve, if you're a single filer, they'll only serve you if you earn under $20,000 or $25,000. So it's really at the discretion of the program.
Okay. This is an easy one. What do you suggest that a Lyft or Uber driver lists as their occupation?
Driver.
Great.
Or if they were feeling really specific, they could say rideshare driver.
Yes. Okay.
Oh yeah, thanks, Michael. Oh, sorry. So Michael just said, remember, if you're out of scope, you're not covered by the Good Samaritan insurance. And that is why it's at the discretion of a lot of folks, right? What is the risk that they're willing to assume if something goes wrong with that tax return? So that is different for everybody. That, you know, all those, it's about a program's level of comfortability around that, and their insurance, what kind of insurance they have otherwise.
Absolutely. And is it true that you have higher chances for an audit if you report expenses under other rather than something specific?
I think that I think that if you have a Schedule C, you're already getting that second and third look. But also, you know, if you are vague about what your expenses are, that does give you another look. And I mean, there are a bunch of other things that will also give you a red flag. So like if all of your numbers end in zeros, those are red flags. If you have just the right amount to get you the maximum EITC on your Schedule C, that's another red flag. So, you know, there are a couple of things that will definitely warrant you an extra look, but being vague can be one of them, I think.
All right, and the final question, is income under $600 reported to the government by Uber and Lyft?
Yes, that is a wonderful question. And if you, yes, the issue is whether or not they have a form, right? So the income is reported, but they're not giving the taxpayer a form. And that's why folks have to report, even if they don't get a form, because the IRS will know.
Yes, absolutely. Awesome. So it looks like that is it for the questions. All right. Well, thank you, Francesca, so much for all of your enthusiasm. You covered so much amazing information. It was hard to take it all in. It was just too much. But you will have the notes, so it's going to be good. All right.
Absolutely.
Well, thank you, Francesca. Thank you all so much for joining us today. And yeah, have a great rest of y'all's week. Have a great holiday week next week. And we'll talk to y'all soon.
All right.
Bye, everyone.
Bye-bye.